Hey, what's up, everybody? It's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage. And yep, it's Fed Day 2025. Well, as expected, things got a little bit bumpy after Fed Chair Powell's conference today. Unfortunately, it's kind of like deja vu from last month. Volatility hit the bond market again, and definitely not in a good way. So here's the short version for my friends out there who just want to know what time it is. The Fed rate cut, no surprise there. We knew that was coming, but they also ended quantitative tightening, which actually means they've stopped shrinking their balance sheet. And I'll nerd out on that for you guys another day. You don't want to hear all that story today. Well, as I always say, it's not the hike or the cut decision that matters. It's generally the press conference and what's said at that press conference after that really moves the markets. And boy, am I disappointed to be right once again, because the big movement came when Powell said, specifically, a December rate cut is far from a foregone conclusion. Now, that single line sent bond prices lower, yields higher, and mortgage rates straight up. So, if you're closing soon, like in the next week or so, I'd probably recommend going ahead and getting that rate locked. If you're closing later, like maybe 2 weeks or more out, stay really close to your mortgage advisor if they've got a good grip on the market. If not, I'd advise finding a certified mortgage advisor that can help you. It's a really volatile stretch that we're getting ready to go through. All right, everybody, that is the quick version. Now, for my friends who like to know a little bit more of the details and would like to know how to build the clock, let's go ahead and dig in. So while the headlines they sound simple, but that's like the why behind this move tells more of the real story. The Fed did what everybody expected the Fed to do: a rate cut and the end of quantitative tightening. Now, those were basically non-events, which you could see from the market's really flat reaction right at 2 p.m. But when Powell took the mic, he poured a little cold water on the market's optimism. That not a foregone gone conclusion line about the December cut, well, that is exactly what flipped everything. And mortgage backed securities sold off hard. They went from being way up this morning to being down over 20 basis points really, really fast. And remember, when MBS prices go down, mortgage rates go up. It's the inverse relationship that most people forget about, but it's everything when you're trying to understand rate movement. Now, traders, they'd been betting almost 100% on a December rate cut. And Powell basically said, not so fast there. In real time data, Fed funds futures for December jumped from 3.625 to 3.69%, a huge shift for one day that tells you how wrong the market's positioning was. So why is Powell hesitating? Inflation's still running hotter than they'd like, but the real sticking point is employment. So we haven't seen enough evidence yet. The job market's cooling. Reports like ADP hinted at it, but the Fed needs confirmation before cutting again or before being confident in those rate cuts again, at least. So what we're seeing now is kind of a tone shift from let's get ahead of this slowdown to let's wait and see. Now, wait and see is exactly what I was afraid of, at least in terms of immediate relief for a lot of my clients out there. That change in tone, it pushed yields back up near the highest level since October 10th, around that 4.06%. So, what does that mean for you? Well, kind of like I said earlier, if your loan is closing in the next week or so, I'd probably go ahead and lock, get yourself protected. Like I said yesterday, protect your sanity from any additional intraday repricing or anything that could happen overnight. Now, if you're a few weeks out, you might consider floating, but only with a certified mortgage advisor or somebody who actually understands the relationship between the stock market, the bond market, at least in terms of how it affects real estate and mortgage rates. And I'm going to say it again: strategy and timing often matter at least as much, if not more, than the rate itself. So there's a lot of loan officers out there who frankly couldn't tell you what a mortgage backed security is. Make sure you're not getting your advice from one of them. That is it for today, everybody. I'll go ahead and circle back in a few days once all this data kind of settles in. In the meantime, if you've got any questions about where the market's heading or how to time your rate lock, reach out anytime.